GEM International is a new diamond explorer in the richest diamond producing country in Africa, located next to the fourth largest producing diamond mine in the world. International Spotlight is on an 1109 carat diamond recently discovered in Africa by a fellow Canadian junior with a proven operator and finance team. GEM International trades on the TSX Venture Exchange, symbol GI. Visit us at gemdiamondmining.com.
You're listening to HowStreet.com radio, available online at TalkDigitalNetwork.com. Welcome to HowStreet.com radio, the online source for market opinions. Here is Jim Goddard.
My guest is Danielle Park. She's the president of Venable Park Investment Council Incorporated and the author of the popular blog Juggling Dynamite. Welcome back to the show, Danielle.
Hello, Jim.
So this is our first show since Donald Trump was elected president. Is he good news, bad news for Canadians?
That remains to be seen. I am of a bunch of different minds about all this. On the one hand, he is not a character that appeals to me. He's not someone that I feel warm and fuzzy about in any way. And yet, a part of me is also, and this is very unpopular to say, and my friends take issue with me when I say this, but a part of me is happy to see that the status quo received an abrupt shakeup in the election of Donald Trump. Now, the question is, can he do any lasting damage before the end of his term, or before he's impeached, as some people swear he's going to be, or whatever? Is there any sort of big picture effects that he can harm in the meantime? But the positive effect that I see is that it's a wake-up call, I think, to all the establishments around the world, just as Brexit was. You know, this belief, or this migration, let's say, over the past few years of the left and the right towards corporatocracy, towards serving the big corporate interests and basically turning their backs on the working people. That's been going on all over the world. It's happened in various times in history. And you always get some kind of a turning point where people somehow put their foot down. And in this case, I think, you know, the electoral votes going to Trump was one of those events. And, yeah, I'm worried about his position on the environment. He lived in a, you know, gold tower in Manhattan. He doesn't seem to be connected to the natural world in any way, and I don't think he's very aware of the fragility of our ecology and how important it is that we do intelligent things to protect it. But above and beyond that, you know, I had grave concerns about Hillary Clinton as a leader too. I think she represented in many ways the same, you know, privileged elite class that goes around the world threatening everyone that any kind of change will be hell. You know, that if you vote to leave the Eurozone, that it'll be the death of you. If you break up if Britain leaves the Euro, that's the end of the free world as we know it. I think all this is really just an orchestrated message to scare people into maintaining the status quo, and I don't think that the status quo is serving the best interests. So it's probably going to be an intensely disruptive and anxiety-filled time, but I would suggest to you it has been that way already for quite some time, depending on what socioeconomic group you move in. And I think that it just came to a breaking point in this sort of shock event in the U.S. election.
Janet Yellen, the head of the U.S. Fed, says, first of all, she's going to stick out to the end of her term, and that if she does decide to up interest rates, it's because she's taking into account the policies of the new government. Well, so far, what policies?
Well, sure, we're in very early days, and there's many things being battered about. I think a lot of, again, going back to status quo forces at work in financial markets in the world, the trillions of dollars of support that the central banks have given to financial markets have disproportionately rewarded some people in the economy, and many of them are the political elites and corporate leaders that are trying to maintain the status quo. So I think there was always a worry that if you got in a wild card like a Trump government, would that mean, because he has said some very severe things about central banks and their price fixing in financial markets, and basically had said that he would make some big changes. But I think, as much as I think there is desperately change needed in many of these approaches, and the powers of the central bank have been a very negative disruptive force in my view, especially over the last decade, you have to wonder, I go back to when Obama came in with a big majority in 2008, and the perception or expectation of change was enormous at that time. And yet, if you look back on 8 years of the administration, the achievements, I would submit to you, were very small. And that was coming, don't forget, after, a Republican government had been in for 8 years before that. So I think that the truth of the matter is that every 8 years, people are ready for some change, and unfortunately what they tend to get is more of the same in whatever government, whatever stripe or color comes into the majority. It tends to perpetrate the same policies. So I think, I think there's a couple of things right now. I think the thing about the climate momentum, the revelation of people everywhere that the natural world is changing and that it's starting to become a threat to many of the populations that live on the planet, water shortages, air quality, all these issues, migration of people, immigrants, leaving the Middle East and ending up in an immigrant crisis in all these countries. This is all connected, and I think people on a social side are really aware of that. Whether or not the official leader, comes in and embarrassingly says it's a hoax of the Chinese, which is, the laughing stock of the world, to the horror of the world, really, that anyone would actually still say that nonsense. But the point is that the real people in the world see it and know that it's happening. The scientists agree that many of these factors are going to be an enormous drag on the world economy and are compounding as we speak. At the same time, you've got free market forces already coming up with all sorts of solutions. And I think we're really in this massive global boom of investment and innovation in green and clean energy and, basically environmental systems. So I don't think any one president can stall anything like that because it is so big and the movement has so much momentum. And again, if you live in ivory towers and you think that the world is all about the financial markets, I think you might be missing that the real people need things like food and water and air, and that has always been a precipitous force in driving massive, toppling of governments and regimes in the world, is when people can't get the basic necessities or things they need to have a healthy existence. So I think you've got that huge social movement, that huge business movement, which is companies figuring out they can make huge profits, and this is a massive growth area, and it's good job growth available in this business area, coming up against the rhetoric of a new government that says, insanely, on the one hand, he says he's a business leader and that he was hired because he's a business leader and he knows about business, which is awesome, great. But then on the other breath, he says he's going to quash this momentum in this sector that is clearly sweeping the world right now, in a world of a lot of sectors which are in, secular decline. Consumer goods sectors that people already have complete big ticket exhaustion on, cars and housing and appliances, even equipment in businesses. You've got a lot of exhaustion and sales turning south, and yet in this area you've got all this energy and demand and excitement. So I don't think that any one government is going to be able to quash that, and that's a very positive thing. I don't know if you caught that Ford Motors issued a note today just saying that the demand for vehicles, for their vehicles and for vehicles in general, has turned down worldwide. So that's another example of, we've had 8 years of extend and pretend policies and making it easier and easier and cheaper to get people to buy cars. And at some point, they're just totally exhausted. Like, everyone that could buy has already bought. And now we're having that spike in the debt coming up and not being paid. The defaults are rising. So some of these themes we've talked about for some time, Jim, and, it seemed to defy gravity for a long time, but I think that the big items are now starting to crop up as, obvious dead weights, and you have to look for where in the world we can get good growth and real job development. And I think that's the one offset is that other area that I was talking about.
Well, if Trump encourages more manufacturing in the U.S., he's got to remember that new manufacturing jobs don't go to people, they go to robots.
Well, some of them go to people. I mean, obviously that's a global force, the mechanization of labor, and that's not going to go away. I'm sure that we're going to have more robotic intervention as time goes on. So the world is in a big change in the labor markets for a lot of those reasons. But it's I think one of the things that is driving patterns in the world at the moment, financial patterns, is this appreciating U.S. dollar. So the U.S. dollar is now at a 13-year high relative to the basket of world currencies. And, in many ways, Trump's protectionist rhetoric is supportive of the U.S. dollar. He's talking about, bringing manufacturing to the United States. He's talking about reviving the tax code so that corporations repatriate their U.S. dollar holdings, which are currently on deposit in other countries. And he's talking about making changes to the tax code so that they bring that money back home. But what it's really doing is driving a bunch of money flows out of emerging markets and other economies and currencies, and everybody looking to come up with U.S. dollars. This repatriation of the currency home was already sort of in the works for the past couple of years. As the price of oil came down, a lot of emerging economies sell oil, and so as the price comes down, they have less U.S. dollars in their system. Unfortunately, they've also borrowed a lot of money in U.S. dollars because rates were very low for a long time. So now as the currency has been rising, it's more expensive for them to repay this debt, and you're getting sort of a credit of a liquidity crisis in many countries in the world. At the same time as the U.S. dollar rises, of course, what happens is the price of things like oil comes under further pressure. So I think these are secular moves, and the U.S. dollar may well continue to appreciate for a while longer here. The Federal Reserve today has said they intend to raise rates. They've been saying that for a while, but that would be considered a hawkish statement in support of the currency. And as I say, all these forces, whether they're tax policy, whether they're manufacturing policy, trade policies, the rejection of the international trade agreements, all these things are leading countries to pull back in and look at what kind of domestic demand they can promote at home. And it's this buy local phenomenon on a global stage. Instead of globalization where everything was about buy from wherever you want in the world, now we're coming to a phase where it's all pulling back in and looking at what you can make and consume in your own country. Well, the United States has a huge advantage there because they have this bulk of the relatively most affluent population in the world. And so they do have a good deal of their own goods can be consumed at home. And that's an advantage that, for example, countries like Canada don't have. So I think many of these policies may well serve to help strengthen the U.S. and its economy, to help bring down the debt and rebuild savings and investment in their own economy, which will all be good. But it will be difficult for other countries that have become unduly dependent upon selling things to America in the past few years, and that has been a major imbalance in the world. So, there's good and there's bad in this. If you think about it, when a household goes through financial stress, they very often pull in and say, well, we're going to do our own chores. We're going to, stop hiring other people to do things for us as much as possible and do it all ourselves, because to manage our own balance sheet, that makes sense. It'll help us cut expenses and raise savings. And I think that's all very valid. Country to country, the same kind of impetus applies, where a person thinks, let's stop selling, giving our cash flow to these other countries, reinvest it at home, and figure out ways to be resourceful here. All good, except in aggregate, you're going to have less trade, less global GDP, and some countries are not going to be able to support themselves in that environment, and that's when you get into, a financial crisis in many of these other countries.
We'll have more with Danielle Park right after the break.
I'm Larry Ray, President and CEO of American Manganese, Inc., listed on the TSX Venture, ticker symbol AMY, A-M-Y, with proprietary patents in the U.S., China, and South Africa. Our focus is on recycling lithium-ion batteries for electric vehicles. China recently legislated the responsibility for recycling onto their electric vehicle manufacturers and importers. For more information, please visit AmericanManganeseInc.com or phone me, Larry Ray, at 778-574-4444.
Welcome back. We're speaking with Danielle Park. So, Danielle, in a trumped-up world, where's a good place to be if you want your personal finances to grow, or at least not diminish?
Well, certainly again, any government that had come into power right now would not have would have found the same financial facts. So nearly $20 trillion of U.S. debt today versus, half that when Obama came into office in 2008. A world where we've had, 8 years of central bank relentless intervention in financial markets, driving the price of assets worldwide to the highest levels they've ever been. In many sectors, we have overvaluation as the order of the day. We have it in bonds, we have it in stocks, we have it in real estate. So it doesn't, just because a new government comes in, whether it had been Clinton or whether it's Trump, it doesn't change the fact that that's the landscape they land on. So as far as investment climate goes, that has not made a fundamental difference in terms of making things more attractive. Some things have got more expensive, like old economy stocks, since he's been elected, because of his rhetoric about, helping to bring back clean coal and some of these industrial, the old kind of industrial sector in the United States, and push out or take away any concessions for new technology areas. So tech sort of sold off, and these older economy stocks have come up. But at the end of the day, they're still heinously overvalued. And so I think that again, don't let political change or at the face of it cloud your assessment of reality, which is that things are still not very attractive on an investment perspective, that liquidity is still what everyone's desperate for in the world today. Most countries are bringing in, or a lot of countries are bringing in controls about cash, not wanting people to have a lot of currency. They want all the money back into the system. So I think that maintaining your own liquidity should be the focus here. As I said many times, paying down debt, getting rid of superfluous real estate before everyone else starts trying to do the same. If you have, extra properties that are all trading at these high valuations and you're levered, now's a good time to try and lower that leverage and increase your cash savings. Certainly some U.S. dollars for Canadians can be good at this point since it's appreciating. And just the highest quality government deposits in Canada that you can find without having to go out too far, I think would be the best places to sort of wait this shifting out, this shifting of political forces, but this point in the economy where we are, and any kind of shock to this system sort of can topple this domino effect of all these highly valued, highly levered assets, thinly capitalized participants who have taken on too much debt in the belief that you'd never get another downturn. All this kind of crazy behavior has gone on all over. So I think, that advice remains the same, is just trying to avoid the things that are that, very overvalued and at risk of a major decline. Maintain your liquidity, keep your capital safe and dry, and just sort of go back to figuring out what makes sense for your family on a risk management basis.
Danielle, thank you so much for chatting with us.
Thank you, Jim.
My guest has been Danielle Park, editor of the popular blog Juggling Dynamite. You're listening to HowStreet.com radio. Find us on Twitter at Talk Digital Net. Our YouTube channel is Talk Digital Network. You can forward questions to info@HowStreet.com. I'm Jim Goddard. Thanks for listening.
Comments made on HowStreet.com radio are an expression of opinion only and should not be construed in any matter whatsoever as recommendations to buy or sell any financial instrument at any time. Available online at TalkDigitalNetwork.com. HowStreet.com radio is a production of HowStreet Media Incorporated.